All right, yo, what's up for everyone on the replay? I hope you were having a great day. I'm just going to give the quickest stock portfolio update, and then I want to show you a couple stocks that I think are going to be great additions to the portfolio next week to potentially buy, especially with all the conflict and warfare. Some of these are nice defensive names to kind of hedge your portfolio, and I own some of these, so I might be biased. But yeah, let me just start this off quickly with my Robinhood portfolio. This is my dividend-only account where every stock I aim for pays a dividend in here, and every stock does pay a dividend. And we are down year to date 4.76%. So we've done a little bit worse than the S&P. Or let me check the S&P. Yeah, the S&P 500 is down 3.3% year to date. So we're down a little more than the S&P 500. No big deal. But here's our total percent change on every stock. We are green on every stock in here. And we also have a Roth IRA. A Roth IRA is just a tax-free retirement account. You can't withdraw the money till you're 55, but you can actually withdraw it early if you're a first-time house buyer, or if you have some emergency medical or school expense, you can withdraw it early, tax-free as well. But yeah, here's my Roth IRA. I'm trying to bring some growth back in here because it's not done too well. We've had it for exactly a year pretty much, and we're down like 8%. So yeah, those are all my holdings in there. And then we have actually, let me go to my Webull portfolio. This is kind of like my risk on account. I kind of just own a bunch of risk on names in here. Some of these you probably recognize, like AMD, Robinhood, SoFi, Reddit, Disney. AppLovin's my most recent purchase in here. I'm really happy about AppLovin. It's a new software advertising name in my portfolio. And then finally, and we have some defensive names in here too. One of the stocks I own in here is the first stock we're going to go over because I think the defense is pretty nice going into next week. And then here's my Moomoo portfolio, known as our buy and never sell account. Not much has really been happening except for our defensive Coca-Cola Consolidated hit a crazy all-time high on Friday. Like just boring bottlers like outperforming like every stock. It's unbelievable. They're starting to be one of my like best performers. We're up almost double on them. Or actually we would be up double if we didn't buy more shares up here. But I'm like, even at 147, this is still cheap. And now it's at 220. But let me show you the first stock I want to go over that I think is a great deal. And I actually own them in my Webull portfolio, and you can get in at pretty much the exact same price as me. And what's up, Plasma, Tommy, Looney? Good to see y'all. Nick, what's up, guys? Hope you're having a great Sunday. But the first stock I want to go over is AbbVie. And even if you buy the stock right now, no matter what the stock does, you're getting 3.2% of your money back just in a qualified dividend every year. So the dividends for me are completely tax-free since long-term capital gains are 0% tax rate for me since I make under $48,000 a year. But here's why I think AbbVie, you're going to get a 3.2% dividend every year. And on top of that, I believe you're also going to get 3 to 4% in stock price appreciation on top of that. Here's my thesis for how you're going to get that. Yeah, look at the forward PE here. It's only a 22 forward PE for the kind of growth that AbbVie has. I think that's almost undervalued. So they sell a bunch of different prescriptions. Their largest prescription is called Skyrizi. And the growth of this one, I mean, look at that annual trend. I mean, full year 2019, it was 355 mil. Now it's 17.5 billion. Just this quarter, it was 5 billion, a record sales up 32%. So that's where I think you're going to get the 3 to 4% stock price appreciation from these businesses growing crazy. So main business is up 32%. That's great. Their second biggest business, Rinvoq or whatever. Yeah, look at the annual trend here as well. It's just ridiculous. Up 30%, after grew 46, after grew 63, after grew 56. Just incredible growth. And they have a bunch of, I won't go through all of these, like Botox Therapeutics. Like this one is up double digits, almost $1 billion for the first quarter ever. So with the 22 forward PE, 3.2% dividend yield, good growth on their main prescriptions, I believe you should get 7 to 8% total return a year. Again, 3.2% in dividends and then 3 to 4% stock price appreciation every year. And I actually own them, so I might be biased. You pretty much get in at the exact same cost basis as me. That blue line is where I bought my shares at 219, and it's at 219 right now. So I thought the rest of the order was pretty good. 22 forward PE. Let me know what you think. So that's the first stock I kind of had on the list for today. That one's a defensive name. These other ones are a little bit more growthy. And I'm particularly bullish on Uber. They just had a huge partnership with Waymo. So I've always been a believer that, robo-taxis are a fear for them, but it's not as big as a fear as people think because they have the platform. They have where all the users are. So like Amazon has Zoox, Google has Waymo. Amazon Zoox actually partners with Uber. So where you can book a Zoox on Uber, it's where you go to book your autonomous driving app. That's where the money's made. Uber to launch commercial robo-taxi service in Las Vegas, full autonomy expected by end of 2026. Uber, Nissan, and Wave partnered to launch robotaxi service in Tokyo in late 2026. So they're not going to get out innovated by these autonomous driving cars. They're actually going to benefit from it. Uber backs ex-CEO, new self-driving car venture. Okay, well, anyway, let's go look at their numbers because that all sounds good, but how are they doing fundamentally? The answer is great, and I'll show you. So, actually, fun fact, Uber has 202 million monthly active users. This exact same time last year, it was 171 million. And these are monthly active consumers, people actually spending money, so not just users. That's great growth from 170 to 202 million. And their main business is still growing. Their ride sharing mobility business, it's up 18%, after grew 25, after grew 33, after grew 73. So, this is still on a streak of growth, growing double digits. Another huge growth driver for them is actually their delivery business. They're doing like B2B like delivery where you can almost like ship packages, and also just Uber Eats. That's up 30% year over year. The growth rate's growing here. That's the crazy part. It's up 30%. It's like the highest growth rate on the entire screen. It used to be like single digits down here in 2024. They brought back to double digit growth. Just incredible. And they print free cash flow. This was a record profitability quarter. They made 2.8 billion of free cash flow. Incredible. That's how they do all these acquisitions and partnerships. And they had a little adjustment to their net income. They actually made a lot more. So like excluding the one-time adjustment, this was a record profitability quarter on net income and free cash flow. And they don't have a dividend to pay, and they're not very leveraged. So anytime they're making this cash, they just retain it. And they do sometimes they do share buybacks, but they invest it back into the business. But like they just acquired an app called Spot Hero. I used that app. It was an undisclosed sum. It had to have been for probably over $1 billion. It was great acquisitions. They own a huge stake in like what's that company called? Grab. Yeah, this is the international Uber play. This company Grab does exactly what Uber does. Look at this. Uber Technologies, the largest shareholder. They own 13% of all the shares. This company does exactly what Uber does, but internationally. And Uber, it's hard to get into those markets. So they're like, hey, why not just buy the top international player, Grab, where you notice they're not competition for Uber. Notice all the revenue, it doesn't come from the US or Canada or UK. It's all Malaysia, Indonesia, Singapore, Thailand, Vietnam, these niche countries. Kind of cool. So yeah, Uber. Oh, and I forgot to show the forward PE here. Literally, Uber, you'd think they'd be crazy expensive, but they only trade at 21 times next year's net income. I mean, it seems pretty fair in my opinion. So yeah. Uber's a pretty good one. Hey, what's up, JVM? And no one, what's up, TTWO? Hey, we'll check those ones out. Is this recorded? Just glitched? Probably my internet if it glitched. No, this is live. What's up? So last stop I had was actually Reddit stock. I really think this one's undervalued. On my math, they're at like a 25 PE. And they have no debt. So this whole company, like I'll give you my simple formula. If you look in the top right, this whole company's worth $25 billion. So the whole company's worth $25 billion. Well, first off, a lot of people think Reddit's like some meme stock. No, they really grow the fundamentals. Like, look, this is just their revenue, their top line. They're actually getting a lot of revenue right now from licensing out their data to train other LLMs. But look at these year-over-year growth comps at the bottom, the green year-over-year growth rates. Like it's up 69% this quarter, 67, 77, 61, 77. Incredible growth on the revenue. And not just the revenue that's growing, but the net income. This was a record profitability quarter. They made 250 mil in net income. And again, crazy year-over-year growth rates. At this growth rate, what's it going to be the same time next year? So basically, if we annualize this number, 250 mil, that's $1 billion in net income a year. And again, the whole companies were 25 billion. So that's an easy math, a 25 forward PE. What did the analysts have it have? They have it have a 29 forward PE. But here's why the PE is actually lower than that. Because this company has no debt and 2.5 billion of cash. 2.5 billion of cash is 10% of 25 billion. So 10% of what you're paying is just their cash on hand. That just adds a lot of safety to the company when they have literally no debt, 2.5 billion of cash. The cash is earning interest. This cash pile just grows every quarter as they print more free cash. Like, look at these free cash flow numbers, 263 mil of free cash flow, great net income growth. So 29 forward PE, I think it's closer to like a 25, 26. In full disclosure, I do own Reddit. It's one you don't want to probably have as a major size position. I got 4 shares of Reddit. But yeah. Ooh, someone said TTWO Take-Two. Hey, that's your video game stock. You're really waiting for them to release, this is the GTA company. So you heard of Rockstar Games, which is Red Dead Redemption and GTA 5. Their catalyst you're waiting for, and what's really led this stock to grow so much is the pricing in of GTA 6. So yeah, later this year, supposedly this year, November, December, they're going to release GTA 6, and that's kind of the big future growth catalyst. Because right now the numbers aren't too good. Here's their net income. They legit for like just years, like as far back as we go, like literally since 2023, all they've done is just burn on average like couple billion every year of actual net income. So they're not even close to profitability right now. But the catalyst is whenever they release GTA 6, it should bring them in billions of revenue, lots of new profit, lots of reoccurring revenue in the future. So it's really just a bet on GTA 6. And I'm pretty sure all analysts know about it at this point. Like it's not some thing no one knows. But yeah, you definitely want to watch these net income numbers. That's the only thing that scares me is like, how are they losing so much money? It's unfortunate. I think they own some other games as well, like a bunch of other games. Uh, Maybe we can go to their website right here. I guess Borderlands 4, yeah, Rockstar, which is GTA 5, GTA 6. Anywho, that's your game company. I like other gaming companies more, like a Tencent if I had to pick one. That actually, I'll show you this one, TYCEY. If you like video game companies, this is the best one in the world, I think. They own Riot Games, so, Valorant, League of Legends is huge. They own Supercell, so, Clash of Clans, Clash Royale, Boom Beach, Payday, all those games. They own 49% of Epic Games, which is Fortnite. They own half of Fortnite. They own PUBG Mobile, all that. So it isn't one of your biggest video game plays. That's Tencent, Chinese ADR. And speaking of ADRs, someone said Futu is down. Yeah, this is shocking to me. I've been buying the dip up here because I'm like thinking it's a steal of a deal up here at 170. Well, now it's at 140, almost at my cost basis again. And so Futu is the app I'm on right now, publicly traded. And I think they're a phenomenal, one of my top picks. Honestly, I should have put that on my list today. This is one of my best stocks, I think, to buy now. So they just reported earnings. Yeah, Q4 numbers are out. So check this out. They did 827 mil of revenue, 44% increase. On this 827 mil of revenue, they netted 433 million after paying roughly 90 million of taxes. So they really did make 433 million of real after-tax net income this quarter. This is a brokerage again. This is the app I'm on right now. So the brokerage commissions, let's see, that's up 35% year over year. I'm assuming the cash sweep slowed down a little bit. No, wow, it's up 50% year over year. Robinhood, their cash sweep program numbers are down like 30%, 20% year over year. I guess not this one. Their interest income's up 49%. How's the crypto revenue doing? Other revenue, whoa, up 80% to a new record on the screen. Just see, this is a real growth name. Cheaper valuation than Robinhood and Webull, but potentially more growth. I think it'll have more growth. On the right, they only traded 11 times forward PE, 11 times next year's net income. Seems pretty fair. Yeah, that interest income, they like this cash I earn, they give you like a 3.35% APY. They earn like a 4% APY and like give you the rest. Hey, what's up, Chase? How low can AMC go? I don't even know if we should cover AMC. Yeah, that one, just a meme. You're not buying them for the fundamentals. You're buying them on some like swing trade news, like another Roaring Kitty type moment, because this almost like is definitely going bankrupt. If not, yeah, look at that. So just like simple math here, like if we're judging them as a long-term hold, definitely not a good one. Because if you look in the top right, the whole company's worth 577 mil. You buy the whole company. Let's say you spend 577 mil buying the whole company, or you're buying an asset that, lost you 130 mil this quarter, 300 mil last quarter, then 4 mil, then 200 mil, then 130 mil. So you're just in 1 year, you've already lost more than the whole market cap. Plus, they're super leveraged, a lot more debt than assets and cash. And then how are they going to pay off the debt when they just lose a couple hundred mil more every quarter? They're issuing shares. And it's just like a dying actual like industry, movie theaters, kind of low single digit decline on that business. So it's a swing trade kind of stock. Hey, what's up, free speech? Great news for Archer Aviation. They'll start flying in 10 states. Hey, nice. Should we check that one out? Hey, Narc said Funko. Is that Funko Pop? Yeah, hey. I feel bad about this company. Y'all know, like, people like to collect those little, like, Funko Pop things. It's that little toy collection company right here. Sadly, they can't get profitable. Look at that revenue decline. So that's rough, first off. The revenue's down 25% year over year. So that's bad organic 15%. Revenue's down 15 after it fell 7, after it fell 15. So rough little streak of declining revenue there. And I mean, it's not too bad Oh wait, let me go to Ooh, they're losing like 20 mil net or 25. Well, that is still 10%. Yeah, so even if they lose 20 mil a year, which is being a little generous, that's still 10% of the market cap. I can see why this stock is struggling so much. The fundamentals explain it. Can't get profitable, revenues, organic revenues declining, leveraging up. So yeah, I would not buy Funko Pops. I think I'd rather buy an actual Funko Pop that maybe will hold its value maybe better than the stock. I don't know. Yeah, this is what I'm talking about. If you haven't seen these before, and you, yeah, tough buy. Would don't think I trust that one too much. Hey, should we look at Archie Aviation? I see some SoFi. Ooh, let's do SoFi. Yeah, have you heard about the Carvana false earnings report? No. Should we check that out? Carvana stock, are they moving? Yeah, hey, there's a lot of stocks I'm going to get to. Y'all got some good names like Visa, Amazon, Dow, UNH. I'll try and get to all these. Yeah, we're going to be live for another 2 hours. I appreciate y'all. We stream every day, but every Sunday this exact same time for 2 hours. And I think I'll do another stream later. But here's SoFi, one of my favorite. And I sell nothing. I have no course book. I just under give my opinion, sell nothing at all. So anyway, the metric you watch on SoFi, because this is a big fintech growth stock, and it's their financial services business specifically. This is the metric that's been crushing all analyst expectations. Like no analyst expected this sort of growth. Like it's up 80%. Like all these year-over-year growth rates in the middle, it's either up like 70 or 100%. Just incredible growth. No analyst expected it to just consistently grow 80 to 100% quarter after quarter every year. So that business just hits a new record. We can actually see the analyst expectations. It's this orange line down here. And for the past like 8 quarters in a row, they just beat on revenue every quarter. They beat on net income every quarter. And the net income projections are higher. Net income is going to go from 97 mil to 197 mil. So we're going to double the net income. There's still a lot of EPS growth expected. That's why, since we're a growth company, look at the forward multiple because there's still 100% net income growth, EPS growth. So if you look at their current valuation, yeah, they look expensive at 45 PE, but their growth company, look at the forward metric, they only trade at 26 or 27 times next year's net income, which is why I think it's attractive to start the slight nibble on SoFi. Like if you wanted to go all in on SoFi, I wanted this as 5% of your portfolio. Don't make it 5% of your portfolio today, but maybe you go ahead and make it 1% because I really don't see it getting much cheaper with the growth that they have. Like I could not see SoFi like a 22 forward PE. That would be weird. You know what I'm talking about? So yeah, risk reward's really looking decent. Ooh, Interactive Brokers 6-star. What's up, dude? IBKR. Yeah, I love the brokerage industry. This is like a more, I don't know, kind of like a more quality Robinhood, maybe. Yeah, so Brokers right here, a cheap valuation on the right, a 26 forward PE. And the best part about brokerages is their net margins. So if we head over here to net margin, just incredible. 43% net margin. And the net margin on the bottom is up like double digits every quarter. So incredible net margin, incredible, dang, 7 bill of free cash flow that quarter. Just like printing easily over $1 billion in net income according to, like, check out that net income trend. That's what you want to see. So I'm a big fan of the brokerage industry because they just have such high margins. Like the margins are growing. So the revenue's 2.7 on the 2.7 bill of revenue. They netted 1.2 billion after paying taxes, and the free cash flow is even better. So yeah, this is another great one. They make a lot of money from interest income and commissions, just like food too. Look at the commissions revenue. Great growth, double digits. How's the interest income? Up double digits too. Nice. Daily active trades or the darts. Brokerage accounts, they have 4.4 million paying brokerage accounts, 26 4P. Actually, I really like Interactive Brokerage, but I guess the competition or the maybe bear case would be like these other brokerages just being new competition like Robinhood, Futu, Webull, whatever. But this good stock, good fundamentals. I'm just a fan of all of them. I own all the fintechs. I own Futu. I own Webull. I own Robinhood. I own SoFi. I own Dave. I love that industry. All right, let's see what's next here. Ouster. Hey, what's up, mister? Let's do Ouster. OUSTs. This is a LiDAR play. I'm actually like, this is probably the best LiDAR play. They have a phenomenal growth to them and they're crushing expectations. So, and they like, check out this quarter specifically. Analysts expected 41 mil. They did 62 million. They're expected to lose 22 mil in net income. They made 4 mil. And it wasn't like this was some one-time adjustment either. In EBIT, earnings before interest taxes, they made 8.6 million. So it wasn't like some gap accounting trick making them look net income positive. No, they really did make money this quarter. I think they did an acquisition. No, actually, if I think that might just be organic growth. Wow. I that's nuts. 62 mil of revenue, basically no net debt at all, deleveraging the balance sheet. I'm actually going to put Ouster back to the top of my watch. It's just like a smaller market cap one. You definitely wouldn't want to trust a meaningful amount of your portfolio in this company, but it's maybe one of those niche names where you just put a little bit amount of money into and kind of see what happens, because the risk reward's starting to look great. And LiDAR is really popular right now. Everyone's getting into the autonomous driving vehicle space, and it's really popular to use LiDAR. Google's Waymo, Amazon Zoox, even Tesla robotaxis even now has LiDAR sensors on their cars instead of their own thing. So on some of them. So LiDAR is interesting. Or yeah, Ouster. And that was really interesting to see they actually got profitable kind of this quarter. So, oh yeah, Visa stock. Let's do Visa. This is a payment processor. I think there's some European news where the EU is like planning on maybe like making their own card to compete with Visa. So like they're not just using Visa and MasterCard. I won't even talk about that now because that doesn't even mean anything. Visa's a good stock, a quality company at a quality valuation. Like, this is what's crazy. Like, Visa's only at a 23 forward PE. That's insane. And they print actual money, like really do print. Those small little micro credit card transaction fees that are slowly bankrupting us is making Visa a boatload of money. So check this out. Easily, this is real after-tax net income every quarter. They really do make over $5 billion of net income a quarter. So what's Visa doing with $5 billion of net income a quarter to play with? Well, they pay a small dividend. That dividend only costs $1.3 billion. So I believe there's going to be a lot of future dividend growth. But since the dividend costs so little, they're doing hecka share buybacks at the top. Literally 3 to 5 billion of share buybacks a quarter, and they do that for all of eternity. They literally buy back like 3% of all the shares a year. So no matter what, the stock, you should get like 3% share price appreciation plus another 1% dividends, and then like 3% more in stock price appreciation. Like, you should potentially get, if you buy it now, like 8 to 10% of your money back every year for the rest of the time. Like, they do really like 23 forward PE. That's crazy. Here, operationally, Visa processed 67 billion transactions, up 10%, rose dividend by 14, repurchased 14 million shares, revenue increased. Oh yeah, they have some international exposure too. So check this out. Yeah, international is most of their business. US is only 39%. And check out the future analyst expectations. Revenue is going to go from 10 billion to 11 billion, and they constantly beat. Like, look at that. For the past 3 quarters in a row, they're beating on their expectations. So it's just like the thesis around Visa. I know there's some like bad news maybe around like the EU news and just crypto cards, but they're actually investing in a crypto card and not get out innovated. So, hey, what's up? Shout out to member Jeff Mack and Looney. Let me go over Sentinel, and then we'll go over PGY. That's another cool software name. What's up, Aaron? Yeah, hey, remind me to get to Tesla and some of these other names. Sorry if I forget to get to some of these. I just kind of do whatever I see first. So here's Sentinel One. I believe this is a cyber security. Yeah. So they're in the cybersecurity category right here. Let's see if we can. They created the world's first specially built extended detection and response platform based on artificial intelligence, making network security defense truly autonomous from endpoints and elsewhere. Does Morningstar have any coverage on this company? They do. So Sentinel-1 has strong secular tailwinds as endpoint security market projected to grow rapidly. Like, I'm just a big fan in the long run of cybersecurity. Like, hackers will utilize AI and get better at it. Their Singularity platform improves itself over time, thereby making customer churn less likely over time. Guess here's some bad news. Large public cloud vendors often offer their own cybersecurity solutions, which could hamper growth opportunities. Sentinel-1 faces competition from CrowdStrike and Palo Alto Networks. So Everyone has competition. Anyway, let's go look at their numbers. The only bad part is, yeah, they're not profitable yet, but they are narrowing their losses. Like, this is what we really look at. They narrowed their losses by 21% year over year. Like, the same time last year, they lost 90 million. Well, they lost 70 mil this quarter while growing their top line very nice, too. So, yeah, check that out. They're probably just falling because all software cybersecurity stocks are falling right now. But like, because their revenue is hitting a new record every quarter, we really just want to see them get get profitable soon. Kind of like a rubric, RBRK. That's another one that like grows really fast. Oh yeah, good balance sheet too. We just want to see them actually make some profits. Yeah, RBRK is another interesting one. Rubric. They're also on a dip. Another cybersecurity name. Um, Look at how fast this one grows. Revenue's up 46% after grew 47. So these are niche, smaller cybersecurity ones, and they might be better buys than like just buying the top dogs of like Palo Alto and CrowdStrike. But yeah, I do love Palo Alto and CrowdStrike stock. So here's another software name. Thanks again, member Looney. I appreciate you. And then what's up, Awaken? I see let's do Rocket Lab next. Yeah, and we'll do Ever. Yeah, there's so many stocks I want to get to. My bad if I missed these. I definitely want to do all these. I see Symbiotic. Hey, nice, Nick. That's a great robotics play. SYM. It's a pretty good one. And Taiwan Semi too. So here's Pagaya Technologies. They reported earnings and fell. What did they report? So okay, they did miss on revenue. So check that out for a high growth, high PE company. Or they're not high PE. Actually, they're a cheap PE. The forward net income multiple is only a 7. I mean, can it get much cheaper? So they only traded 7 times next year's net income. But yeah, they did miss on revenue. Analysts expected 350. They only did 339. Hey, yeah, by the way, if you want to support me, make sure you subscribe to my YouTube channel. Like, TikTok just removes my stream from For You page eligibility just out of nowhere. So yeah, if you want to support me again, I sell nothing. I have no course book, but make sure you follow my YouTube channel. My YouTube channel is called Nathan Robert. It's also because I'm probably about to end the TikTok stream. If you want to continue watching the stream, please go to my YouTube channel. It's called Nathan Robert. It's in the link tree in my bio. But you can just type into YouTube Nathan Robert. You'll find the stream, and it stays up forever over there. So anyway, PGY right here, and I'll definitely get to your stock if you go over there. I appreciate you. But yeah, anyway, so they did miss on revenue, but net income still looks great. They actually beat on net income. Analysts expected 32 mil. They did 34 mil in net income and 79 million of EBITDA. So yeah, they really are profitable. Yeah, check out the past 4 quarters because it used to be a tough buyback here when they were losing a bunch of net income every quarter. But now at a 7.5 forward PE, it actually seems really interesting. Let's go to their website. Well, I guess we can't view their website, but anyway, they're like some correct me if I'm wrong. I think they're like an advertising software company that helps out a bunch of like S&P 500 companies, something like that. Or maybe we can check out their software infrastructure, machine learning. Okay, anyway, interesting. So let's do Rocket Lab. This is a space stock, probably my favorite space stock, but they're too expensive. Like, they're ridiculously expensive, unfortunately. But they do have great fundamentals. Like, the momentum is continuing on this stock because the fundamentals are pretty quality. They have a big backlog. They're launching a bunch of neutron rockets. Yeah, their backlog is 1.85 billion. So 1.85 billion backlog, and that backlog is up 73% year over year, providing strong visibility into the future. Space Systems did 108 mil of revenue. Launch Services maintained excellence with 21 successful launches in the year, including 7 in this quarter. So in 100% mission launch rate. So yeah, if we go to their Space Systems revenue right here, this is what you want to see for a growth company. The annual trend, 402 million for the full year 2025, up 15. It was 100 mil just this quarter. Great numbers. And not just the Space Systems business growing, but also their launch services. That is up 80% year over year. That is the real growth driver, 80% year over year growth. And the analysts don't see them stopping. Revenue is going to go from 144 to 204. So great growth there. And they're supposed to narrow their losses. So they're only supposed to lose 38 million in net income too. So yeah, they are still losing money. That's kind of the bad part. They're losing like 50 mil, 60 mil a quarter. But as long as they keep growing their top line like this, growing that backlog, keep on doing acquisitions. They actually just acquired a company called Geost, which was great. Yeah, they're doing a lot of investments. They're deleveraging their balance sheet, probably from share issuance. Yeah, so definitely from share issuance, but it's deleveraging them. Look at the liabilities going down and the assets going up. That's what you want to see for a growth name, but it's too expensive to buy today, I think. But I wouldn't be shocked to see the momentum just continue on that one for sure. If you had to choose a high growth semi play, is Broadcom better upside than Nvidia? Let's do Broadcom. Then let me do Dell real quick. Let me get to Dell, then we'll do Broadcom. What's up, Max? And Navitas. Yeah, I would actually Navitas Semiconductor. That is a stock you don't buy if you're looking for a semiconductor play, and I'll show you why. Just in my opinion. So here's Dell right here. This is like your infrastructure play. They just like install the server chips for you. Dell raises PC and server prices 25% amid memory shortage. Yeah, that's what's weird. Dell shipments forecast to decline by high single digits in 2026 amid memory shortage. Well, that's not even their main business, their PC sales. The main business that's booming right now is this infrastructure solutions where they're taking over Supermicro's business, where they're installing your servers and your chips all for you in your data center. And that business, the past 5 quarters, the growth rate has been great. It's up 25%. Last quarter's up 44. That was really impressive. And they're growing their net income. Like, look at this net income beat. They expected $2 billion. They did 2.25 billion. So they really do print money over $1 billion to 2.2 billion a quarter. What is like they really did make 2.2 billion after paying 750 mil of taxes. So what are they doing with 2.2 billion of net income to play with? Well, first off, they pay a dividend and it only costs 350 million. They have like a 2% dividend and it only costs that's like a 16% payout ratio. Very low payout ratio. And check out how the dividend, if you notice, the cost of the dividend's going down. It used to cost 390. Now it's only 340. How did that happen? Well, it's because they bought back so much of their dang stock. Because whenever you buy back your own shares, you don't have to pay dividends to those shares. And look at the buybacks. They're doing over $1 billion to 2 billion of buybacks a quarter. They can easily afford it. So the net income's up by 47, but the net income per share is up by 57 because they bought back 9% of the shares and you get a 1.4% dividend yield. That's what's so attractive about Dell. They're just very shareholder friendly, benefiting from all this AI infrastructure and new AI builds. Data center spend. Pretty cool. So Broadcom, this is a TPU play. Definitely a better semi play than Navitas. Let's see. Raises fiscal 2027 EPS to $18.72. Let's do that math. So 322 divided by, what was it? 17.5? What's that forward multiple? That's an 18 forward PE. Potentially, if you buy Broadcom now, according to them. Well, this is 2027 number. So yeah, their forward PE is basically an 18. You could buy Broadcom at an 18 forward PE. Broadcom begins mass production of Tomahawk networking chips. So yeah, I believe one of their top customers right now is Google. I want to see if I can find that news specifically. Yeah, they're guiding great news. Man, it's out of the news now. So anyway, let's just go. Oh, and they guided 2026 revenue of 22 billion just for the next quarter. I mean, but look, yeah, here's where the forward PE comes. So yeah, anyway, this is a growth company. So we don't look at their current PE. You look at the forward PE. So right now it says they trade at 62 times net income. Well, look at that forward multiple. It's cut in half. It's only a 30 forward PE. And again, this one analyst at Citigroup puts Broadcom as top pick and the EPS of $18.72. That's an 18 forward PE, which almost cuts this in half again. Because look at the future growth projections they're seeing. Revenue's going from 15 bill to 2 quarters from now, it's going to be 30 billion. That's going to be nearly 100% increase in just the revenue. So the revenue is going to double. The net income's going to more than double. Net income's going to go from 4.14 to 12. You annualize that, that's close to 50 bill a year of just net income after tax. And it's not going to stop at 12 bill, I don't think. So literally, here's their net income right now, 7-8 billion. It's going to 12 billion, they're saying. The free cash flow is phenomenal as well. So it's, what do you think the growth story is? I think this is one that the risk to reward is starting to look pretty decent, and it still looks a little expensive. So I still wouldn't go crazy buying yet, but to just maybe nibble on them, buy one share or something. Definitely seems interesting. As Google, Meta, Amazon, they're all working on their own TPUs, their own chips, sensor processing units, and it's actually to the beneficiary of Broadcom, who helps they make all the mainframe and stuff. Yeah, that one's pretty cool. Ever looked at Opera? Yeah, they're on my zero debt watch list. I have like a, let me actually see if I can find that. I have a watch list of here companies with no debt. They're one of the companies in here like DocuSign, Pinterest, Zoom, Yelp. They all have no debt. Powell Industries, Opera. Has anyone heard of the Opera GX browser? I added this to my watch list when Google was getting in had the monopoly lawsuit where they potentially maybe had to spin off Google Chrome that would maybe benefit Opera GX browser. Yeah, has anyone heard of the Opera GX browser? I feel like I see ads for it a bunch. But let's see. I still stick with Google Chrome. So user base expansion was notable with Opera GX reaching 34 million monthly active users in mini-paid digital wallet. I didn't even know they had that, a mini-paid digital wallet, activating 13 million users. Opera Air and subscription-based Opera Neon browser features and AI capabilities. So they're cheap. I believe most of the stock is owned by like the Chinese insider. Or let me see if I can find that. Or no, actually, it's actually changed. I could go to like a couple years or I don't know what I'm thinking then. Oh well. Maybe thinking of a different company. But what I love about this stock is, yeah, they really do only trade at 12 times forward PE. So they only trade at 12 times net income. Yeah, they have no debt, so that's a huge risk off the table. They're on my zero debt watch list. They have 155 mil of cash and no debt. The whole company's worth 1.3 billion. And when you have 115 million in cash, nearly 10% of the market cap is just cash plus a 12 forward PE. They just have big competition from Google, Microsoft, and it's a search browser. So yeah, kind of good numbers though. Like I like that they print that income. I think they do dividends too. What's up? Charlie said ODD, a lot of cash plus growth. Let's check it out. ODD, Oddity Tech. Yeah, hey, if y'all want to help me out, hit the like button. Appreciate y'all. Yeah, what's up, George? We'll look at KKR. That's a PEPC company, right? Definitely. What's up, Larry? So, and I see LVMH. Yeah, hey, Picano. We'll do Louis Vuitton stock too. That's an interesting one. So here's Oddity Tech. Dang, look at that. Yeah, they gapped down crazy on earnings day. Let's go see what they reported. See if that's justified. So they beat by revenue by $1 million. So it's not like they beat or missed like crazy. They beat on revenue by $1 million. They beat on net income, beat on EPS, and they beat on EBIT. So they beat on every metric by like 1%. I'm guessing for them to fall like that, they must have given bad guidance. They must have lowered guidance. That's my only thing. So yeah, look at that. It's going to be a negative year-over-year growth. So look at this. The revenues, the lifeblood of the company is going to go from 240 to on the right, 195 mil. That's going to be like a 15, 20% year-over-year decline to the revenue. So like Q1, it was 268. They're expecting it to be 187. And the next quarter, the next Q1. But good news is, yeah, look at that. They really do make good money. Like they are profitable. So yeah, what's the forward multiple here? 26. So it is more expensive. Like they're saying they're at a 7 times current PE, but the forward PE is a 27, which is still like not expensive. So yeah, I think I can see why the stock is struggling. Maybe they must have guided this. Look at the net income. It's going to go from 49 to 13 mil. So there's going to be negative revenue, negative net income numbers. That I think might be why investors are a little nervous. But other than that, I mean, $780 million company making net income every quarter. But it's the future expectations, I think, that are hurting the stock. Hopefully that provided some good context. So LVMUY, that's the stock ticker for LVMH. They're kind of a cool company. I like them better than Nike because they own a lot more brands and higher margin products. Like they own Hennessy, and a bunch of watches and jewelry brands. So yeah, mainly it's their bags. So fashion, leather goods, their bags. That's 50 or 46% of the revenue. But yeah, look at this. They have watches and jewelry, higher margin kind of. Look at that. For the full year 2025, it's back at a record when I think some of the other business are maybe slowing down. Perfumes, that's got to be high margin. Wines and spirits, like Hennessy, like that. So pretty cool. And here's the full year. So this is in US dollars. They're a European company, but we converted it to USD. For the full year 2025, they did 13 bill in net income. So they really did make a lot of money. Only a 20 forward PE. It's actually a cheaper forward PE than Nike. Nike's at a 31 forward PE. And I like them more. Number of stores, they got 6.28 thousand stores. Yeah, here's where the revenue comes from. Wow, the US, I thought it would be more. I don't know why, but US is 23% of the revenue. And again, they're European, so they report in halves. So next half, 2026, the first half, they're supposed to make 6.77 billion and then 6.8. So that'll be another like $13 billion net income year. Okay, there we go. I test. I just banged my mic, so sorry if that went out for a second. Okay. Um, I forgot what I was saying. We are good. Okay, let me know if okay. Yeah, Louis Vuitton seems pretty good. Not gonna lie. Um, I used to own Nike. I wouldn't buy Nike here. Yeah, so it's not again. We looked at Louis Vuitton, Louis Vuitton stock. They're struggling bad. It's not just a Louis Vuitton problem. It's like everyone's struggling. Here's Nike stock. Look at 28 forward PE on Nike. Another one is Keyring. So we just looked at luxury stock. Here's Gucci. So we looked at Louis Vuitton. Here's Gucci stock, and I think they own Balenciaga and stuff. But yeah, Gucci. Yeah. YSL is 18% of the revenue. Gucci is 40% of the business here. Look at their net income numbers. Yikes, that's a decline to profits. So maybe luxury is just out of style right now. Don't know, but there's your kind of luxury stocks. Let's do KKR. Yeah. KKR, this is a PE, private equity, private credit play, kind of like a BlackRock. If I was going to buy the dip on one, I would go with BlackRock because I love their other businesses, like their ETF business. What's their yield? And they have a lower yield, 0.85% dividend yield. Yeah, dang, look at that forward PE, a 10 forward PE. Okay, that's cheap. That's a cheap forward multiples. Oh, okay, so I might be wrong about KKR. Okay, actually, they're an insurance company. All right. Or actually, let's look at the annual revenue. 11 bill of revenue there. Asset management. I really like asset management industry because you just collect like high margin fees. I mean, the forward PE was a really cheap. Huh? Yeah, look at that. They're easily making like 1 to 2 bill of net income a quarter if you average it out. Should be good dividend growth with that 10 forward piece. So yeah, the dividend costs 205 million of net income a quarter, and they easily make over 205 mil of net income a quarter. So yeah, very safe dividend. Yeah, I wish I could give you more thoughts on them. That probably wasn't too helpful there. I apologize. Maybe Morningstar is something on there. KKR with 585 billion in fee occurring AUM. Yeah, see, the crazy 585 billion in assets under management they own fees on is one of the go-to firms for institution and high net worth investors looking for exposure to alternative assets. So yeah, it is, I think, a PE company kind of. Downturns in equity and credit markets could leave investors in KKR funds with limited liquidity. Anyway, it's a private equity play. I think I'd rather buy a BlackRock just for safety. But I mean, I don't know. They're still great. I don't see anything wrong with that company. Ooh, can you compare Broadcom with Cisco? Let me get to some of these other stocks first, and I'll come back to that. Yeah, please remind me. Let's go with Adobe here, and then we'll go to, hey, what's up, Mason? Oh, Brookfield, I think BN is. We'll try and get, hey, what's up, Luffy? Good to see you. And T-Boss, yo, if you're still in here, thanks for that heart, that gift there. I appreciate you. So yeah, Adobe, this is one really getting crushed by the AI thesis. And their CEO, at a critical time, it's kind of a bad look, and who knows, maybe this will end up being a good thing. I think it'll end up being a good thing. Maybe the board pushed for the CEO to quit, but the CEO just quit down out of nowhere. He just stepped down out of nowhere at such a crucial time. It's not good for the sentiment. Also, Adobe settles U.S. government lawsuit over hidden cancellation fees. And another $75 million cancellation practice where they make it impossible to cancel your subscription. They had to get fined for that as well. Adobe prioritizes free AI product trials as ARR slows. Freemium users surpass 80 million. The main bear thesis is in 10 years from now, will we need Photoshop, Adobe as much? Because maybe you could just plug something into Google Gemini, and it'll create that logo for you, that thumbnail for you. Who knows? The AI will do most of the art. I'm always a believer, though. Humans are always going to need kind of that final touch on art, but it certainly is something to think about if you're a shareholder here. They've gotten really cheap. Maybe the fears are fully priced in. Who knows? I mean, a 13 forward PE, literally only traded 13 times net income. They beat on every metric, by the way. So look at this. They beat on revenue. They beat on net income. They beat on EPS. They beat on EBIT. It's just the fears. And I guess the slowdown. So the revenue's up 11, profits are up 11, Free cash flow's up 19. Yeah, they do 2 to 3 bill of free cash flow a quarter, and then like 2 bill of net income a quarter. What's Adobe doing with all that net income? Well, one cool thing is the share buybacks. Look at that. They're doing 2.5 to 3.5 billion of share buybacks like every quarter. But one thing investors are kind of pushing for, like Michael Burry, because he just bought a stake into them, is for them to do an acquisition, like acquire Mid-Journey, or like instead of spending 10 billion a year on buybacks, which have kind of been poorly timed because most of the buybacks were at like over $300, do an acquisition. But yeah, 13 forward PE. I mean, the share buybacks are going to do at these prices are going to be great. So accretive to the stock price. Um, what is BN real quick? Let me do BN. Brookfield. Okay, yeah, so this is another private equity play. So asset manager as well. Let's see if we can get any earnings results. Nope. Oh yeah, private equity, infrastructure, asset management, pretty similar to KKR and BlackRock. Uh, so revenues up 3%. What's the forward multiple? Because these always you got to look at a forward multiple because they're always so there is no forward PE, or maybe no analysts just cover the stock. Yeah, so just no analysts cover Brookfield for or that I see. You get a dividend. It's just the payout ratio is a little high for the dividend yield. The dividend's kind of down from 2022. I don't know about Brookfield. They have some high quality assets. I just know they're a quality asset manager. I know there's BN, that's Brookfield. There's also BAM, which I don't know what the difference is, but there's like Brookfield Asset Management. Like there's this stock as well, which is like also like part of Brookfield, or 18 forward PE here, and it owns all these like different businesses like credit. So I don't know which one exactly to look at or judge. I think this one maybe is better with like a 4% yield, but I don't know. Maybe we should look at BlackRock. Y'all want to see BlackRock? Hey, Sheldon, what's up, dude? He said Vistra, VST. They're actually cheaper than I thought. So, they've had this crazy stock price appreciation the past 3 years from electricity, AI infrastructure, boom. And even at this price where they still maybe look a little pricey, they're only at an 18 forward PE. Like if you look on the left, you think they're extremely expensive, 72 PE, unbuyable, but 18 forward PE. This is your second, third best, probably nuclear play. They own a couple, like I think 4 nuclear reactors. They're a big natural gas play too. But yeah, they benefit from electricity demand going up, full year net income. Yeah, I'm assuming they had some weird one-time adjustment because they shouldn't be at a 72 PE. Let's see. Net income, or yeah, I'm guessing that quarter when it says they lost 268 million. They didn't actually. That must be it. Anywho, they're kind of like I like a CEG better. If I was going to buy one, this is like your main best nuclear play. These are just like your unregulated utilities, and CEG might be the better play. They own the most amount of nuclear reactors. They own like 34 nuclear reactors, largest pure play. They're at a 29 forward PE, a little bit more expensive, but they're more high quality. They're the number one nuclear and natural. Well, they're number one nuclear and geothermal play. I don't know about natural gas. Hey, so T-Boss, dude, heck yeah, let's do Netflix. Thanks for the gift again. I appreciate that. Yeah, Netflix, and Jo will do Google and some of these other ones. Yeah, for sure. All right, let's do it. So here's Netflix. Yeah, the reason they gapped up on this day is because they did not buy Warner Bros. Discovery. So it really was one of the reasons why the stock was trending down is because all the fear around them acquiring Warner Bros. Discovery for $90 billion. Like it's a lot of money. Oh, wow. Look at this. Netflix acquires AI filmmaking startup Interpositive for up to $600 million. Yeah, Netflix withdrawals from the Warner Brother Discovery acquisition, and they actually receive $2.8 billion as a breakup fee. Just free money. Hey, they can return that via share buybacks, just extra free money. Why not? So Netflix isn't expensive. They're an easy company to understand. They're only at 29 forward PE. For quality Netflix, at 29 forward PE seems pretty fair. They have like 300 million premium subscribers. Their ARPU, or their average monthly revenue per membership, is $11.69. They print like 2.5 to 3 bill in net income a quarter. A lot of people would like cancel their Netflix subscription last. If they had to cancel something, they wouldn't cancel Netflix first. So yeah, they really do have like a nice, like even in a recession, people still pay for Netflix, and whether or not you watch it, they're still collecting that monthly payment every month. So that subscription revenue. So yeah, it's this nice subscription model entertainment company. Like everyone got Netflix, right? Hey, this is the best. Yeah, fertilizer. Speaking of fertilizer stocks, this is like the best one. CF Industries. They have no exposure or no supply chain risk exposure from all the um, Israel conflict and the shipping routes. So anytime the price goes up, I was just reading this, they just like net print money. I think this is like, yeah, check this out. Um, Ooh, high shipping and shortage cost for importers of nitrogen fertilizer limit the competition for CF. Anyway, I was like just reading something where like basically anytime the price goes up, it just like purely benefits them. So yeah, this is a fertilizer play. Price of fertilizer is going up. So yeah, commodity play. Look at this bottom line. Like it's so consistent, so good. They're making up like 400-500 mil in net income. 1.5% dividend, safe payout ratio. So yeah, that's your agricultural plant cultivation industry fertilizer stock. And yeah, check that out. It's at all-time highs, much like an oil stock right now. Breakup fee was a lot of money for them. Yeah, that was pretty cool that they get that. Ooh, let's see. What's up, Michael? Well, she said root stock. Oh, and then oh, my bad, Luffy. We'll do, are you still in here? We'll do HESAY. So here's Root. This is like a nichier, smaller, direct to consumer insurance company, kind of like a Lemonade, if you heard of them. Let's see if we can go to their website right here. Oh, it's a car insurance company. So Root Insurance is the nation's first licensed insurance carrier powered entirely by mobile, founded on the belief that the services you need for everyday life. So anyway, it's maybe a pitch on a better car insurance, property, casualty insurance play. So the revenue growth has been great. Look at that full year 2025 revenue, 1.5 billion. I mean, that's just the highest ever. Incredible. Let's look at it quarterly. Yeah, 21% year over year. Let's see, did that beat expectations? So the stock is kind of struggling right now, but let's see if it's because of the fundamentals. I don't think so, because look at that. The past 3 quarters in a row, they've just beaten on net income by a good chunk every quarter. They beat on, or that was revenue every quarter. They beat on revenue every quarter. Here's the net income. They're expected to lose 7 mil. They made 5 mil. And that was real too. That wasn't some accounting trick. Like that was real EBIT they made. Expected to lose 5 mil. They made 10 mil. They made EPS. So yeah, they've look at that revenue stream. So as long as they continue this revenue growth, seems should be good. I mean, I guess the net income's kind of struggling a little bit. I guess it used to be so, or maybe the forward PE is still expensive because of that. Actually, no. Look at that, only a 19 forward PE. This one actually looks really interesting. So the short interest is a 16%. 16% of all the shares are being shorted. Maybe there's some maybe bear thesis I just don't know about. I don't know. But like just at a quick glance, I mean, everything seems fine here. Everything looks good. Some sort of car insurance company. All right, let's do it. HESAY. And hey, should we look at BlackRock stock? What's up, Larry? And then we'll do SANM. Yeah, sorry if I'm missing some of these. There's a bunch of stocks I want to get to. I see Oklo. What's up, Eric and Donnie? Love the transparency. Hey, I appreciate you. I really appreciate you, Donnie. Yeah, just try and keep it real. I sell nothing. I have no course book. I sell absolutely nothing. Just trying to give my opinion. So yeah, if you want to help me out, only way to help me out is just hit the like button on the stream. And yeah. So anyway, here is Hermes. This is another kind of luxury stock. They've actually been holding up a lot better than Louis Vuitton and Nike. So let's go look at them. We'll convert the currency to US dollars. Oh yeah, and I love being fully transparent with my portfolio. So if you want me to show any of my portfolios or something, I can show you that too. Yeah, 39 forward PE. So Hermes, probably saying that a little weird. So leather goods and saddlery. Wow, that's had a great annual growth. So like when Louis Vuitton and Nike, they're kind of struggling where the revenue's negative. This one's positive. Ready to wear accessories, that's also at a record. Other Hermes professions, that's at a record. Silk and textiles. So, and I know they sell this stuff for a high margin. What's their net margin here? Yeah, 30% net margin. So they made for the full, again, they're European, so they report in halves. That's why it says H1 in full year. For the full year 2025, they did 5.4 billion of net income. And these are all green numbers. Like that's a record net income right there. Like it's never been higher before. So I can see why the stock has also done great. Yeah, Fortress balance sheet. Check that out. That's really good. 14 bill of cash, and what was the long-term debt? Oh, no, basically no long-term debt, less than like 200 mil of long-term debt. So they have a bunch of net cash. You get a dividend. Yeah, this that thanks for bringing this one up. I'll put them on my watch list. I forgot about them. Another one that's doing surprisingly well. Oh, it's Tapestry. I think it's TPR. So Tapestry, yeah, look at this stock. I guess Coach has been the real winner here. Like Coach and Kate Spade have been growing very nicely. When some of they're like a medium tier luxury company. Okay, let's keep going here. SANM, let's check it out. SANM, this is a semiconductor play, I believe. Did I just unplug my mic again? I don't think I did. Okay, good. I don't know. Is this the company Meta took a 2% stake in? I don't remember. But let's see if we can get some analysis on this company. That's a cheap forward multiple, only 22 times forward net income. That actually seems pretty cheap. So, uh, manufacturing solutions. Look at that quarterly growth. They must have just acquired a company because just quarter over quarter it grew 65% out of nowhere. Let's actually see that. Did they do like an acquisition? So yeah, look at that. They did. You go to their cash from investing activities, you want this to be negative because if this was positive, that means they're actively selling out of their assets. They bought a company for $1.5 billion. So that could be another, like that's why the revenue grew so much. It's inorganic growth, but still growth nonetheless. They still make net income every quarter, 50, 70 mil. What are the future net income projections? Yeah, so the forward PE is at 22. It is cheaper. So yeah, that's not exactly expensive at a 22 forward PE. Where does the revenue come from? Let's see. Okay, so it's kind of like an international chip play, maybe because Mexico is their biggest country. Okay. Yep. See, thank you, TikTok. Just cooks my live stream and makes me fill out a captcha. Okay. So yeah, Mexico's 40% of the revenue and the US is 17%. Let me see electrical components is the industry here. So manufacturing solutions, components, products and repair, logistics, aftermarket service. So I can pull up their website if it'll load real quick. But if it takes too long, it's taking too long to load. End-to-end service we provide. All right. Well, anyway, some sort of maybe like data center like these electrical components might just benefit from the whole AI boom right now. Must be some sort of thesis like that. And maybe we get Morningstar research. Nope. Morningstar doesn't cover them. Well, hopefully that was kind of helpful there. 22 forward PE. Hey, what's up? Someone said BATL. What is that one? Battalion Oil. So this is like a very small market cap play. Like you want to be careful here. They're only worth $307 million. They might just be like a high beta oil play. I don't know. Like there was some sort of news down here that sent the stock up a bunch. Maybe that news was the war. I don't know. Maybe they also got some sort of deal. Maybe we can check the intelligent comments here. There's been news that the Iran government. Okay. Do they have revenue? Let's see. Let's hope they do. So the revenue is 40. So they do have revenue, 43 million. On that 43 million, they actually did make 800K. So they're actually really not losing any money, which is good. Yeah, they're not losing any money. It's just a really small company. Probably a short-term swing trade kind of stock. Yeah, exploration and development of oil and natural gas. There's obviously that one doesn't pay a dividend. Like a lot of people, if they're going for an oil stock, they want to get like a good dividend one. I would, anyway, I don't know about that one. I'd just be careful because the market cap's so small. What is PTEN? Is that the right stock? Patterson UTI Energy. So they've done great the past couple months here. Maybe it's an oil stock or, yeah, so they are an oil and gas stock as well. They do the drilling. So they must also have a declining revenue right now. But again, it's the future expectations because the price of oil is so high that should only bring them more profits in the future. So that's why the stock is going up right now. So the revenue is 1.15 bill, and they did not make any money on that this quarter. They technically lost a slight bit of money, but some future expectations. Yes, they have a 3% dividend. That's a tough dividend to pay when they basically have made no money in 7 quarters. So when we zoom out and kind of see why they haven't done too well, like you compare this to like an Exxon Mobil or Chevron. Yeah, dang. Technically, this stock is the same price as they were back in 1998. I would be careful with that one, but they've certainly done great these past couple months for sure. My oil play, or it's really a gas station play, it's done great as well these past couple months. Is MUSA, Murphy USA. They literally just own like a bunch of gas stations. And the theory and the thesis here is that every time or whenever the price of oil is really high, people don't fully fill up their tank, leading them to come back to the gas station more often. And it makes them sell more candy bars and merchandise and whatnot. Let's check it out. What's up, Outwork? Says MDA. Let's do MDA. I appreciate you. Yeah. So MDA Space, it's a Canadian company. Oh, there's like a US MDA and like a Canadian MDA. Well, let's just look at the Canadian one, I guess. Any news around this company? MDA completes 300 million IPO. Oh, a dual listing. So yeah, that's how they have two tickers. They have some dual listing thing. Yeah, let's check it out. This company, I remember, like, was just so impressive last time I remember looking at them. Let's see, to get an earnings recap. Satellite systems, business-led revenue growth supported by major programs like Telesat, Lightspeed, and Globalstar. Backlog reached Canadian $4 billion or 4 billion Canadian dollars. That's a huge backlog. Yeah, 4 billion backlog providing solid revenue visibility. That's great news. So yeah, they're a satellite systems business. They also have a robotics, space operations, and geointelligence. Interesting. Are they profitable? So wow, look at that revenue growth. It just grows crazy fast. Hey, what's up, King David? Good to see you, man. Hope you're having a good day. But yeah, this quarter specifically, 364 mil of revenue. Revenue's up 50. After grew 56. After grew 13. So nice streak of growth there. So yeah, some sort of satellite aerospace play, maybe even defense. I don't know. Here's their website right here. Trusted, kind of maybe a competitor to like a Rocket Lab. I don't know if they do like missile launches, but yeah, 3,800 employees. Here's their website. Manufacturing underway. Pretty cool. Yeah, I can see why the stock has done well. Like the real fundamentals have the revenues grown really fast. There's also is it LDOS or I don't think no, it's not this company. There's a company Google owns that's similar to that one. Or Google owns like 15% of the shares. What's up, Mark? He says, can we check out AIFF? Oh, I want to do Ulta as well. Yeah, we got to do Ulta Beauty. So this is Firefly Neuroscience. We want to be really careful because if you look at the top right, they're only worth 39 million. That's just an extremely small number. 39 million. It's just tough to trust. What do they do? It says rental. For mental illness, medical solution, diagnostic treatment for conditions such as depression, anxiety, and ADHD. Seems like, okay. Huh. Do they have revenue? So they do. They actually, this quarter, they did 388K revenue. I guess that's good news because if we zoom out, they used to do like 10,000 a quarter. It's good to see them do 400K. It's just such small numbers here. It's like when the whole companies were 29 million and you lose 2.9 million, that's like 10% of the company. I'd be so careful with this one. I wish I could give you more thoughts on them. Seems like an interesting, maybe swing trade short term. Like, I guess the interesting thesis is like they're getting their first ever sort of revenue now. So like if it's 300K this quarter, like maybe it'll be a million next quarter. Or like, I don't know. But I maybe trust the smallest amount in that one. Like I usually just don't mess with companies. So like such as like 39 mil market cap is just so tiny. What was that other one? Oh yeah, Ulta. Yeah, I love this is my favorite like beauty and cosmetics company. Dang, 15% decline on Friday. Okay, let's go look at their earnings. Are they out? I think so. So yeah, Q4, they beat on revenue, beat on net income, beat on EPS, beat on EBIT, but the stock fell. Did we get like a reason why? Beauty reports Q4 2025 earnings and revenue beat, but margin compression. Issues conservative 2026 guidance. Ulta Beauty CEO states no plans to increase promotions despite consumers' focus on value. I think like Elf Beauty is like lowering prices right now. But they have great pricing power. Like if we go in just profits, if we go to their net income, they easily make, if we average it out, like 300 mil a quarter almost. So they're making 300 mil in net income a quarter. Well, they also pay, actually, they don't pay a dividend. They do share buybacks. Look at this. What do they do with all that money? They do a couple hundred mil of buybacks a quarter where they literally buy back like 7% of the shares a year. Since the PE is pretty cheap. Yeah, we go to the forward PE here. I mean, it's a 19 right now. 19 forward PE. I think they sometimes do special dividends. Or I don't know. But it's the buybacks that are the real winner. Here's what the buybacks do. Like if you go to the net income, yeah, so it was a margin issue. Okay, yeah, that is something to bring up. Their net margin did fall 19% year over year. Um, but because so look at this. Either way though, the net income, look at this. The net income fell by 9.3, but the net income per share only fell by 5.3. Why didn't it fall this why did it fall less? It's because they bought back 4.5% of all the shares. Pretty cool. It makes the EPS go up more. Micron cheap, I think. Yeah, this is your memory shortage play. The forward PE is actually really cheap. That's why, like, if I was a shareholder of Micron, I actually wouldn't be taking profits. I wouldn't be trimming. But be careful because they report earnings in 3 days. So basically, if you buy it now, it's kind of like betting in earnings. So we're waiting for earnings in 3 days. They have a crazy backlog. So here's the crazy part. Right now, they're expensive at a 40 PE, but there's so much growth happening this next year specifically that you really don't even look at the PE. You look at the forward PE. It's a 9. They only trade at 9 times next year's net income. Check out the net income projections. Like, it's almost unbelievable. It's going to be, like, already this quarter, if we zoom out, it's never even been close to it before. They made $5.3 billion. Incredible quarter already. Well, analysts are expecting next quarter $9.7 billion. And then it's not done there. The quarter after, $12.25 billion. This is that memory shortage that's crushing Nintendo Switch margins, PS5 margins, Apple's phones margins. You know, it's because of the memory shortage that's like backlogged and supposed to stay until like 2028, which is unfortunate. So, but this is your pure beneficiary of that, and the net income projected they're going to make is just crazy good. So, yeah, Micron 9 forward PE, pretty crazy. Yeah, Mark, MDA looked pretty interesting. Yeah. IONQ. Yeah, bet. Let's do IONQ. This is one of the better quantum plays, but still super risky. Let's see if we can find any news. IONQ partners with University of Cambridge. Well, let's just go to their actual earnings report. So I believe Amazon bought like 40 million of their stock. So revenue surged due to commercial customer adoption, strategic expansion, marking a milestone of over 100 million annual revenue. Let's see. Operational progress included industry-leading 2-qubit gate fidelity, collaborating with major partners, and plans to acquire manufacturing capabilities. So they're doing acquisitions as well. But check out this beat. Like they said, this is the first time they're over 100 mil of revenue. They're going to do like 200 mil of revenue like next year. This is crazy. Like they expected 40 mil. They did 60 mil. So check out that revenue beat. That was really impressive. The only bad news is they lose a lot of money. Like an unsustainable amount. Like here are the losses. Like the losses have only gotten worse. Just this quarter, they lost $230 million. It's really just a focus on the top line revenue growth. Like this quarter was phenomenal. 60 mil of revenue be like crazy, but it is like kind of overshadowed by these big losses we definitely want to watch. And yeah, they are, actually, they didn't beat on revenue because the organic underlying business did so well. They actually kind of bought this growth. I didn't realize they bought a company this quarter for $1.2 billion and the quarter before for $670 million. So they're kind of doing the smart thing. This is what I like about IONQ the most. Since they know their stock is extremely overvalued, they're diluting the life out of you. You've been diluted by $2 billion, $1 billion, 400 mil the past year. And but what are they doing with all that money? They're buying companies. Like this quarter specifically, they spent $1.2 billion buying some companies. So guess we'll see how that plays out in the long run. But definitely want to watch these net income losses. 200 mil a quarter is rough. That's a lot of their market cap a year. But if they keep up that top line growth, but again, some of that top line growth is from that acquisition. Okay. Do you think it'll be another red week? Ooh, that's a good question. I don't know. Guess we'll find out. I mean, maybe Bitcoin could be like a leading indicator to see how the market is feeling right now. BTC, we could pull up real quick. Actually, Bitcoin's doing pretty decent. So market opens at 8 p.m. tonight. I might try and stream tonight at 8 p.m. So yeah, if y'all want to hit the follow button, I stream every day. Sell nothing. Let's see here. John said AMAT. Yeah, what's up, John? We'll do Applied Materials and Palantir. Yeah, Brad, what's up? And EV Spartan. Yo, Spartan, dude, thanks for that rose there. I appreciate you, my friend. So yeah, here's Applied Materials. They are also, I think, pretty cheap right now. Let's see if there's any news. Oops. Weekly news. Applied Materials partners with Micron at a $5 billion Epic Center for memory development. Yeah, so maybe they're going to benefit from memory prices and manufacturing of it. Raises quarterly dividend by 15%, marking ninth consecutive annual increase. Applied Materials and Lam Research pursue acquisition of BE Semiconductor Industries for a $16 billion. That's a big acquisition. Expects capital spending to scale to approximately $5 billion as customer projections commences. So pretty cool. Let's go judge their fundamentals because that's what matters here. So yeah, look at that forward PE. It's not exactly expensive. On the left, they're a little expensive at a 35, but you look at the growth because they're a growth company, only a 27 forward PE. Yeah, they're in the semiconductor equipment industry. Maybe display business. Or let's check out the earnings sub. Semiconductor systems accounted for 74% of revenue. Services reached 16 billion. Okay, that wasn't too helpful. All right, they do semiconductor systems, global services. So yeah, they do make good net income. Like, look at this net income, easily like 2 billion in net income a quarter. And judging by the forward PE, yeah, the net income is going to go from 1.7 to 2.3. So there's still a lot of net income growth expected for the future here. Pretty cool. Applied Materials, and they just rose a dividend. Yeah, you get a dividend near half or like a 0.7% yield now that they rose their dividend by 15%. So it still might be a tough buy, but a 27 forward PE, like if I was a shareholder, I certainly would not be selling at a 27 forward PE. I would just hold on to that one for sure. Ready to buy at 135. Yeah, we did a deep dive on Reddit at the beginning. Reddit is on my math at a 25, 26 forward PE right now. And for Reddit, that's a steal. For debt-free growth behemoth Reddit, I think that's a great stock. Maybe we'll come back. We'll circle back to them in a couple. Let me do Palantir real quick because I saw that one. What's up, Brad? So yeah, Palantir. Then we'll do some of the other ones I see. Oh, hey, what's up? XRP. Hey, maybe we can look at XRP too. There's nothing I can look at on XRP since it's a crypto. They don't like report numbers, but that's kind of the cool thing about crypto. Bitcoin doesn't have to worry about an earnings report like XRP. They can't miss on net income and net margin. Like it's kind of like a catalyst-free asset. Kind of cool. And but anyway, here's Palantir right here. And by the way, I own no Bitcoin and I own no crypto at all. I kind of own the beneficiaries like Robinhood and Webull, who benefit every time you buy crypto on their platform. So check this out. Here's Palantir, huge government defense play. Palantir and NVIDIA partner on sovereign AI operating system. Palantir expands partnerships with GE Aerospace, Ondas, pretty cool for military applications. Palantir secures Pentagon AI contract worth up to 10 billion. Pretty crazy. 10 billion contract with the Pentagon. Palantir partners with Centrus Energy to deploy AI for U.S. uranium enrichment. Anyway, Pentagon bans Anthropic as vendor, disrupting Palantir's Maven Smart Systems and over 1 billion defense contracts. Oh, there's Michael Burry again, criticizing Palantir over AI capabilities and military strike incident scrutiny. Okay, well, anyway, the cool thing is a lot of the revenue does come from the government. 54% of the revenue does. And if we look at the quarterly growth, it's so good. Like, this is why there's so much hype around Palantir. They deserve it because no analyst expected them to continue this growth. So, it's up 60% this quarter specifically. That's the highest growth rate on the whole screen. So literally the growth rate is growing for Palantir, up 60%, after grew 40, after grew 10. So yeah, so that's up 60% year over year. More impressively, the commercial revenue grew 82 after grew 31, after grew 31. So like this growth rate is growing as well, 82% revenue growth. Just nuts with S&P 500 companies. Like here's the net income analyst expectations. They expected 460. They did 610. Like every quarter, they just beat like crazy on net income. Most profitable they've ever been. Margin expansion, debt-free fortress balance sheet, prints free cash flow every quarter. Like there's literally nothing bad I can say about Palantir except for the valuation. Like I'd love to own them, but 122 forward PE is just too expensive to pay. They certainly deserve a high multiple, but I just can't buy it at this price. But I love to own them. InnoData seems maybe like a better niche-ier Palantir play. Ooh, let's see. Um, Good news for crypto. What do you think of ASTS? Hey, what's up, Noah? So ASTS, and then we'll do some of these other ones. Yeah, I see Duolingo, Pinduoduo too. Yeah, that's Temu stock. Yeah, hey, what's up? Yeah, Pinduoduo is kind of interesting. And then we'll look at Duolingo too. Here's AST Space Mobile. This company is in a transitional phase. Like the spotlight is on them for the next 6 months because they're converting from a company that does no revenue to a company doing a bunch of revenue. So if we zoom out right here, this quarter specifically was really good. If it load here, sorry, my thing I guess is a little slow right now. Please, revenue. There we go. There we go. So this was crazy. They did like the same time last year. Look at this. They were doing nothing, 1 mil of revenue a quarter. It's an impossible to buy stock. But this quarter, they did $55 million. Like that's insane. And the growth isn't done here. And that beat. Analysts expected 41. They did 55. So basically look at this year-over-year comp. Revenue's going from 1 million to 40 million. We want to have a full year of these like high numbers. So yeah, that's why the stock I think has had so much hype around them and momentum. And it's sustained because they're beating on expectations and they're converting to like having real fundamentals now. Like I could not recommend this stock a year ago when they had no revenue, but now like I can kind of see the story here. Some sort of space company, not close to profitability yet. They're still losing a lot of money, 70 mil a quarter. But and they just did a big acquisition. Hey, that's kind of interesting. Let's see if we can get any news on this stock if we get that. Satellite deployment progress with the launch of Bluebird 6, featuring the largest commercial communications array and peak data speeds over 120 megabytes a second. Contract backlog. So in contract, they have a backlog of $1.2 billion. Pretty cool. While manufacturing is scaling to 6 satellites per month, aiming for 45 to 60 satellites in orbit by year end. So some sort of satellite play. With real, doing 6 satellites a month or something like that. Who knows? Kind of like an ASTS. So let's do Duolingo. This is that language learning app. And hey, yo, Mark, I appreciate you, man. Yeah, just trying to... I just give my opinion on stocks. Again, nothing. This is financial advice. I'm just on here to give my opinion. Watch out for people impersonating me. I'll never follow you or DM you. I sell nothing. So here's Duolingo. Yeah, this is one of the stocks really getting hurt by the AI thesis. They're saying in 10 years from now, will the like you pay for Duolingo subscription to learn a new language, to learn a language. They're saying in 10 years from now, will we even need to do that? Maybe the technology will be so good that the Meta Ray-Ban glasses can live translate the audio, live translate whatever the text or whatever people are saying, or like the technology will get so good that you just don't need to learn a new language. So that's the thesis hurting them in the long run. And they have some increased competition, like OpenAI, ChatGPT is working on their own free language learning app, and so is Google. But there's no, like, their subscription numbers are still great. Like, so this is a subscription model company. This is why I'm not going to completely dismiss Duolingo, because there is some interesting stuff here. Look at this subscription revenue. It's up 38%, after grew 48, after grew 50, after grew 50. Like, these are great year-over-year growth rates. So subscription revenue continues to grow. Advertising revenue is up 41% year-over-year. So that's good. And they beat on net income this quarter too. So yeah, here's what, like, this is good. Revenue growth is at a record. Profits were at a record this quarter. It's just, I guess, the thesis that's really hurting Duolingo. Good balance sheet too. I believe no net debt. I remember shortly after they reported earnings, the CEO gave some bad guidance. Like they lowered their margins or whatever. Duolingo bookings top 1.16 billion. Daily active users hit 50 million daily active users. That's actually pretty interesting. So it's just when you gotta think about, what do you think about that long-term AI thesis? Like, will it really crush them as hard as investors are saying? Who knows? 400 million share buyback program. Yeah, 50 million daily active users. Huh. Interesting. So Pinduoduo, yeah, this is like your Chinese Amazon play. So technically they're the same price as they were back in 2020. So the stock has been flat for 6 years. They're Chinese. They're a Chinese ADR, so they always trade cheap in terms of multiples. Yeah, look at that. Only a 9 forward PE. So you can pick them up at 9 times net income. Let's see what their net income is. Yeah, dang, they really do make good money. And this is in US dollars. We've converted the currency from Chinese to USD, and this is in US dollars. They really do make like 3 to 4 billion of net income a quarter. No dividend on this company. Uh, do we get a little analysis here? Revenue slightly missed expectations. Nothing to really read into there. But yeah, anyway, Chinese. There's Alibaba as well. I don't know if you would. But Alibaba's more business to business. This is more like business to consumer with Temu. So yeah. Anyway, there's your Pinduoduo stock. Yeah, they make like 4 billion net income a quarter, 9 forward PE. Interesting. All right. Let's see. Government shutdown could hurt earnings on Palantir. That is true. Fortnite. Hey, do you mean Fortnite, Malik? I guess one way to get exposure to Fortnite is Disney. Disney owns 10% of Epic Games in Fortnite. I usually see a lot of Disney characters in Fortnite. Also, Tencent, they own 49%. TYCEY, or wait, what's the ticker symbol? TCEHY, sorry. They own 49% of Fortnite, but maybe even Fortnite, that cybersecurity company. Ooh, James said Credo. Yo, this is a phenomenal AI beneficiary play. Like just impressive numbers. Not financial advice. I'd put this one on the watch list if you haven't heard of them before. Like, I'll just show you the numbers for yourself and you can draw your own conclusion. I think this will like really impress you. So yeah, look at the expectations. Like revenue's not done. Revenue's going from 223 to 458. Like, let me just pull up the revenue right here. The year-over-year growth rates, it's grown triple digits for the past 5 quarters in a row. So they did 407 mil of revenue. If we zoom out, like that's what you want to see for a growth name. And it's not just the revenue that's growing, but it's also the net income. So on this 407 mil of revenue, they kept after tax. Actually, they don't pay tax, but they kept 157 million in net income. So that means margin expansion. That's unbelievable. Their net margin went from a 21 to a 39. A 39% net margin. Free cash flow was a record. 140 mil of free cash flow, 150 mil of net income, no debt. Literally debt-free company with 1.3 bill of cash. And that cash is earning interest too. It made them 9.5 million of just interest on their cash. So it just takes a lot of risk off the table when you know margins are expanding like this. No debt, great growth, great tailwind, and visibility into the future with data centers. They're like the interconnect business. So yeah, active electrical cables sales surged due to hyperscaler data center demand. Pretty cool. So yeah, some sort of a cable business for data centers, but they are actually headquartered in the Cayman Islands. So the only weird part is they just don't pay taxes. Like they literally have their tax rate is like a 0.2%. So interesting there. Great numbers for sure. Put them on the watch. Oh, this was the stock I was looking for. Yeah, hey, thanks for that 6-star. Yeah, this is the company owned by Google, kind of a competition to MDA Space. They're actually helping out Google Maps. Let me actually pull up the shareholders here. Yeah, look at that. Alphabet, which is the parent company of Google, or sometimes people call them Alphabet. But yeah, Alphabet owns 9.4% of all the shares because they're a big customer of Planet. They have like these Pelican satellites, and they help you look closer, like high quality. Like, a long time ago, Apple Maps, Google Maps sucked because when you'd zoom in, it'd be really low quality. But now you could like zoom in, and it's like really good quality thanks to the people like this company here. So they just launched like 2 new like Pelican satellites into the air. So if we go to the revenue, it's unbelievably good. Check this out right here. The revenue this quarter was 81 million, and it's up. What was it up? The growth rate's really good. It's up 33% year over year. And they narrowed their losses, which is good. They narrowed their losses by 15%, but they are still losing, 20 mil a quarter. But every quarter it's green year over year comp. So they're narrowing their losses every quarter. They're growing their revenue every quarter. And look at how they're beating. Wow. Analysts expected 72 mil. They did 82 mil. Wow. And basically, I'm assuming they had a little gap adjustment to their net income. Because if we just look at EBIT right here, earnings before interest taxes, they expected to lose 15 mil. They only lost 3 mil. So I can see why this stock, despite on what might look like bad earnings, like these are actually good earnings. That's why the stock gaps up on earnings and just continues to climb higher. The momentum is sustained because the fundamentals do look pretty good there. Oh, but watch out. They report earnings on the 19th, which is this week. Actually, I think we get a lot of earnings this week. It should be fun. We'll be streaming all week. Um, Too bad spring break's over for me, so I'm back in college, but I'll still try and stream every day or every other day. Guess here's some watch lists. Yeah, we get Tencent, Micron, General Mills, Alibaba next week. Yeah, PL, DocuSign, nothing actually too crazy. Red Cat, that's a drone play. Okay, let's look at some more here. Um, Astera Labs. Actually, let me do Astera Labs first. Yeah, what's up, Ito? Good to see you. Hope you're having a great Sunday. Let's do Astera Labs, and we'll do BX. What stocks interest you the most currently with good fundamentals? Yeah, hey, Mike, you love the very beginning of the stream. I deep dive into a few companies I love. To start off the stream, I love AbbVie right now. I think AbbVie is a steal of a deal. It's a more of a defensive name, but you get a nice dividend. I own them. You can get them at the same price as me. I just bought 3 shares of AbbVie. I'm up only 0.09%. I think they're pretty decent right now. Core stock, EME looks pretty good. Ooh, there's some other names I still need to double check. Yeah, Procter and Gamble is like a consumer staple, just like everyone goes through their products. You get a 3% yield here, 22 PE. You know, they own like Old Spice, Gillette, Tide, Huggies, a lot of just consumer staple brands. So let me get back to Astera Labs. This is another data, yeah, like AI data center infrastructure play, or like maybe like an Ethernet player. I don't remember exactly. Let's see. Let me just go to the revenue right here. So first off, here's why I like this one. They're a growth monster. Their revenue just hits a new record every quarter. The revenue grew 92%, after grew 180, after grew like 100%. So incredible growth. So on this 270 mil of revenue, they made 44 mil in net income. Like that's the great part. They're finally super profitable. At the same time last year, for the 4 quarters, they lost money every quarter. But now it's like everything changed so quickly. Now they're printing money every quarter. And another huge cherry on top, kind of like Credo, is that they have no debt. They don't owe anyone any money. So that just takes a lot of risk off. They have 1.2 billion of cash. That cash is also just earning them interest. They made 12 million of interest just on their cash pile this quarter, which just adds money to your bottom line as well. They print free cash. Like look at these year-over-year growth rates. It's like super green every quarter on the bottom. Super great free cash flow growth, super great net income growth, super great revenue growth. But the reason I think they're selling off is just because they're still pricey even at current prices. Or let's see what the forward multiple is. So yeah, even on this dip, they're still expensive at a 70 forward PE. But you really do want to do like a couple year out multiple because they're just now like getting this consistent net income. You really look at a couple years out. But yeah, great still visibility growth into the future. They're expected to revenue go from 190 mil to 309 mil. Supposed to make 60 mil in net income. EBIT looks great. So yeah, it's some profitable, growthy. Yeah, let's see. Semiconductor, AI and cloud infrastructure to solve data, memory, and network bottlenecks. Visit Astera Labs booth. Okay. I guess they make like chips or I don't know, some sort of semiconductor beneficiary. So they do server clustering, networking. They have good growth, great fundamentals, I think. I think they just partnered with ARM as well, which is pretty cool. I love ARM. That's like a royalty play, semiconductor royalty play. So here's Blackstone, yeah. Private equity play that's getting hurt, just like BlackRock. Is there any news? Whoa. Their fund faced record withdrawal pressure, experiencing a 7.9% withdrawal rate. You know, that kind of comes after BlackRock's bad news. They had like a private equity fund, some guy out of nowhere withdrawed 10% of the entire funds on one day out of nowhere. So they're like, oh, this is a lot. So we're just going to limit withdrawals. But why I actually like BlackRock more? Yeah, BlackRock launches staked Ethereum trust. What I love about BlackRock more, and I'm kind of getting off track here, from Blackstone, but I like BlackRock as like you want exposure to private equity and all that. You get that with BlackRock, but what you also give a BlackRock is these ETF business, and that like Ethereum ETF and Bitcoin IBIT ETF goes under this alternatives business revenue right here. And check out the full year 2025 growth. They grew 71% to a record from full year 2024. How'd they grow so much? It's their crypto ETFs that just make good fees for them. So yeah, that's a good growth driver. And I guess they're working on some Ethereum ETF. I don't know. But yeah, Blackstone, BlackRock, pretty similar. Let me go back to Blackstone though. I think they're really cheap. I'm gonna guess like a 10 forward PE. Yeah, look at that, 10 forward PE, a 4.4% dividend yield. Um, yeah, look at how they beat on net. Ow! Just banged my foot. Oops. But yeah, they are making good net income every quarter. And for the past 3 quarters in a row, they're beating on net income. So it's not like their stock is falling because they're missing on earnings every quarter. No, it's just sentiment around the whole private equity industry right now. And this might be a more pure, like, I think they're probably getting hurt more than BlackRock because they're more exposed to it. I don't know. Like private equity, real estate. Oh, they're also in insurance too. Pretty cool. Multi-asset investments. So pretty interesting. Yeah, they do make good money. Like it's not like some money losing business. Like no, they're printing like 1 to 2 billion net income a quarter. Let's go see what their dividend is or dividend cost. So yeah, the dividend cost or I guess it changes every quarter, like 1.4 bill in net income a quarter. They can easily afford that. It looks like 4.4% yield. Anyway, I think BlackRock might be the higher quality pick, but I don't know. I mean, that one's still quality. Adam said PSIX stock analysis. Yeah, let's do it. This is a stock I do own. It's one I recommend you keep as a very small position. They're actually like my smallest position. I only have $280 in this stock. I got 5 shares. The stock, I'm like, I want exposure to this stock, but not with a lot of money, but I still want that exposure. So if you look in the top right, they're a small name. They're only worth $1.3 billion. Let me analyze it over here. So yeah, this whole company is worth $1.3 billion, not that much, but out of all the companies worth $1.3 billion, I want the one that makes this sort of net income. Like they really do make, actually they had their net income did fall year over year. It only fell 3%. It says it fell 30 from a tough comp. But anyway, yeah, they're still making good net income every quarter, like 20 to 30 mil in net income a quarter. Because the forward PE is still a 13. I think one reason why the stock has fallen off, like look, this is the funny thing. They still beat on every metric. They beat on revenue this quarter. They beat on net income. They beat on EPS. They beat on EBIT. But we're watching the margins here because yeah, look at that gross margin decline. I guess like the gross margins fell 27%. But I think that like it's fully like that's priced in, like a stock having declining margins, like that's results in a low forward multiple, like they have a low forward multiple. So anyway, I just like them. They're making profits. They're making revenue. We're just really watching that margin issue. Yeah, they make like these complex like energy system machines for data centers. Pretty cool. Yeah, 1.5 million engines sold. Kind of a cool company, niche company, Power Solutions, PSIX, 13 forward PE seems pretty cheap. Again, not one you want to trust too much money in, but still have a little bit of them. That probably wasn't too helpful there. I do apologize, but I do like PSIX. Ooh, Tiger. Hey, wait, let me get to. So, Dookie Doo, what's up, dude? He said Iris Energy. The thing with this one is, these data center stocks, I don't love them just because of the long-term thesis here. Like, again, all this company does is literally they just own a bunch of NVIDIA chips in data centers. And right now, these NVIDIA chips, these GPUs are used to mine Bitcoin. 90% of the revenue, their GPUs are just mining Bitcoin. But they're getting huge deals right now from like Microsoft and other cloud companies where they're like, hey, can we rent out the capacity of your GPUs? Like, don't mine Bitcoin with it. You can use it for our cloud servers. Can we rent it out, basically buy from, or rent out the capacity? And they're like, yeah. So they're converting from a Bitcoin mining company to kind of renting out the GPU capacity. But it's still like a tough long-term thesis here. Like there's nothing proprietary. They do the same thing that Nebius does and that CoreWeave does. They literally just own chips in a data center, but they just happen to be in such demand right now because chips are so expensive. It almost makes more sense to rent them than buy a bunch yourself. I'd still be very, very careful with this one just because the long-term thesis, that depreciation thesis and stuff. So yeah, I think NVIDIA just took a big stake into them, but there's a reason NVIDIA's taking the stakes. NVIDIA has a bunch of stakes in all basically in all the people that are buying their chips like crazy. CoreWeave, all they do is own a bunch of NVIDIA chips. So NVIDIA's giving CoreWeave money. They're giving Nebius money and they're giving Iris Energy money because they're all just using that money to go buy more NVIDIA chips. So I think I'd rather own NVIDIA. Yeah, NVIDIA's $2 billion investment in Nebius and Oracle. Anyway, yeah, I just be a little bit careful with them. Hopefully that was kind of helpful there. Look at a Tiger. Yeah, this is a very cheap. This is an international fintech stock. It's almost like an international like SoFi. Honestly, SoFi should like take a stake into this stock because they're so freaking cheap. So check this out right here. Tiger, they trade at only a 7.3 forward PE. I think it's because a lot of the revenue comes from South America, if I remember. Or no, or look at this. Or a lot of the revenue just is international, like New Zealand. It's kind of like a niche company. 38% of all the revenue is just New Zealand. Singapore is 23% of all the revenue. US is 31%. Providing online brokerage services. So they're a trading and brokerage platform. That's actually really interesting. And look at these net income growth. Like they have paying clients. It went from 1.03 million paying clients to now 1.22 million paying clients. Pretty good. So they have phenomenal growth. Revenue's up 73. Last quarter's up 58, 55, 75. So the revenue's at a crazy new record. And it's not just the revenue that's hitting a record, but the net income. They already are profitable. Again, we saw the forward multiple is only a 7.4 forward PE. They made 53 million in net income after they paid 35 mil of tax. Like this is the before tax number. They made 85 mil. After tax was 53 million. That's your GAAP net income here. And just great net income. And I can't believe they're so cheap at an 8.8. I suspect one of the reasons why they're so cheap is just because of like where the revenue comes from. These like other countries, but like I really like their numbers. It's actually like I'm gonna re-put them on my watches. It's one of the best smaller caps. Like, what's the whole company worth? They're the same market cap as Power Solutions, 1.3 billion. But this company makes like way more, 53 mil, and it's only expected to climb higher from here. Yeah, supposed to go from 7. Anyway, Tiger, really cool fintech play. Particularly looks like an international brokerage, New Zealand brokerage app. Yeah, hey, if you want to get this app I'm on, or this is a brokerage, my favorite app to buy stocks on. Or by the way, all these apps are all in the link tree in my bio. They're all brokerages where you buy stocks on. My favorite app to buy stocks on, though, is Moomoo. It's the very first link in the link tree in my bio there. It's an affiliate link, or all the links are affiliate links. But yeah, if you go and like deposit $100, we'll both get like a free stock. But yeah, it's my favorite app to analyze and buy stocks on. Ooh, MELI. Yeah, let's do that one too. Or maybe you mean App Love. Hey, what's up, Lulu? So yeah, here's MELI. Yeah, this is your Brazil Amazon. Basically South American Amazon. And Amazon just announced a 15-minute delivery service in like the 6 most popular Brazil cities. And it's direct competition for MELI. Like, look at this. 52% of the revenue comes from Brazil. They do the same thing Amazon does, and Amazon is really expanding into their market right now. But this one, I still love MELI. It's like a nichier, potentially more growthier Amazon, because look at this. Like the law of large numbers isn't hurting them like Amazon. Like Amazon does 200 bill of revenue a quarter. Like they just can't double that anymore. But look at MELI. Like incredible. The revenue was up 45% to 8.8 billion. On that 8.8 billion, they made 600 million in net income. So they actually do have good margins. The margin did fall though. Yeah, look at that margin decline. Net margin went from 10% to a 6%. But still, I do really like this company. They're like the cheapest they've ever been. A 30 forward PE. For the growth that they have, like that top line growth really was impressive. Like that's shockingly good. Let's see if there's any kind of AI analysis here, and we'll check Morningstar to see if they have any Amazon context. So yeah, they have a commerce segment grew 40%, supported by increased user engagement and merchandise volume growth of 36. Fintech segment rose 51%. That's really cool. So they have a fintech business that grew 51% with total payment volume up 42, and credit portfolio nearly doubled to 12 billion. Operating margin, so their net margin contracted 10% due to higher logistics, advertising, and credit expansion costs. So that's why the net margin fell. But that might be also why the stock is falling. But interesting one to put on the watch list. Yeah, it's like an international or more like a South American Amazon with the fintech business that's up 51%. Pretty cool. You buy any Futu lately? No, I'm really looking to buy more Futu though, because this stock is one of my favorite buys. We were analyzing this one a bunch at the beginning of the stream. Futu is a steal of a deal. More growthier than Robinhood and Webull, and it's cheaper, and it does special dividends and buybacks, and I love everything about Futu. Futu, by the way, is this app I'm on right now. Oh yeah, hey, so for the guy who just wanted to get this app right now, what this app is doing is it's actually pretty cool. I just got my first $10. You can like you learn and earn, like you just like you read their little articles and then you just get like a free $10 like cash coupon, which is pretty cool. Again, if you want to get this app, I'm on very first link in the link tree in my bio or link in the description there. Free app, costs nothing. There's no subscription. There's no way to pay them money. Completely free app. Like with Robinhood, you have to pay them $5 a month to get like your like cash to earn interest and stuff for a 3.35% APY. Well, this app, you get a 3.35% APY. You don't have to pay anything. You just get that on your cash. Kind of cool. All right. Anyway, let me stop talking about this app. Yeah. Let's go to, I'm seeing some good ones here. Eli Lilly. Yeah. I really like AbbVie right now more than Eli Lilly, but Eli Lilly, they have beaten Novo Nordisk, which is Ozempic and Wegovy, at their weight loss prescription. Their new Zepbound prescription, the results came out like 2 weeks ago. It tanked Novo Nordisk and it made this stock soar up. They have a better working weight loss prescription than Ozempic and Zepbound. They have the best working weight loss prescription. Eli Lilly secures expanded Medicare and Medicaid access for GLP-1s. Look at that. So Medicare and Medicaid get access to GLP-1 prescriptions. I think it's for like $50 a month. Yeah, look at that. We'll pay approximately $50 after deductible a month for Ozempic. Gives everyday person realistic, affordable access or whatever to GLP-1 for the people that need it. Eli Lilly announces $3 billion investment in China for oral GLP-1 production. So that's their pill version. Right now it's an injection, but they have a pill version they're working on. Eli Lilly Japan to invest in Kobe plant. Eli Lilly launches Employer Connect. Well, anyway, let's go judge them off the fundamentals. They print money and they're a little, they're expensive, but they have the growth. Look at this, a 30 forward PE. That's not crazy expensive for the growth that they have. Like, check this out. This quarter, like, it continues to grow. They did 19 billion of revenue. You know, like, it's law of large numbers. It's hard to grow like 14 billion, but they still did. So they're at 19 billion of revenue. They kept 9 billion before tax. And like, here's their profits right here. They had a little one-time adjustment that makes their net income look a little choppy, but net income still looks freaking amazing. But the trend of their profits is better visualized with their operating profit. Like, this looks so good. Their gross margins, their net margins are expanding with the high margin weight loss prescriptions. They print free cash flow. They do dividends. Yeah, they have a 0.61% dividend. 30 forward PE might just be a little too pricey, but their weight loss prescription is really good, Zepbound. Yeah, unfortunate for Novo Nordisk. I would rather buy Eli Lilly than Novo. Like, here's the crazy part. Even though Novo Nordisk is on this crazy dip, I think I might rather go with the more quality Eli Lilly name. Novo Nordisk partners with Hims & Hers to distribute Wegovy and Ozempic, settles patent lawsuit. Dude, this is such great. Hims & Hers used to sell Wegovy and Ozempic like 5 months ago. Then Novo Nordisk ended the partnership out of nowhere. Hims & Hers goes to launch a knockoff Ozempic. Then Novo Nordisk sues them. Then the results come out that their prescription doesn't work as good as they thought. So they're partnering back with Hims & Hers to get the growth back. It's kind of just crazy. Novo Nordisk receives FDA warning letter for failing to report serious adverse events for GLP-1 prescription. Anyway, Eli Lilly is a cool company, healthcare. My favorite healthcare company, and I kind of went over this one at the beginning, is AbbVie. If you're looking for a better one, they're also working on this weight loss prescription right now. Hold on, I wonder if I can find that news. Oh, look, it's right here. See, and this is like not even known. This isn't even like part of AbbVie's growth story yet. It's not even talked about, but AbbVie's obesity prescription demonstrates up to 9.8% weight loss in phase 1 trial. So they're working on getting exposure to this weight loss prescription, but because they haven't even sold that yet, if we just judge all their other prescriptions, it's so good. First off, they have Skyrizi, their largest growth prescription. This annual revenue growth is so good. Like, just this quarter was 5 billion in revenue. It's never even been higher than that before. 5 billion in revenue. Like, these growth rates in the middle are why I think the stock is going to give you like 4-5% stock price appreciation every year. This revenue's up 33, after grew 58, after grew 52, after grew 85. That's why I trust this one to give me good growth. And it's not just Skyrizi growing. Their second biggest, first off, that's 30% of the whole business. Their next biggest business, which is 14%, also just grows like a behemoth. Just this quarter, it was up 30%, 2.3 billion. Also had a record sales on this one, record sales on the other one, and all these other little prescriptions as well. Like Botox Therapeutic, that's up almost to $1 billion for the first time ever. Vraylar, whatever. So, and they're coming out with the weight loss prescription. I think AbbVie's a really good play, and they're not expensive. they're really cheap, I think, on a forward metric. They had a one-time adjustment to their net income the past 2 quarters, so we really just look at the forward multiple. They only trade at 22 times forward PE, and that's off their own guidance. They guided, I think, $10 exactly of EPS. It's a $220 stock, so it's a 22 forward PE. Like they themselves guided for it just over $10 of uh yearly EPS, which is pretty cool. And I love the growth. So I think first off, you get a great dividend. So you buy the stock right now, no matter what, you're getting 3.2% of your money back just in the dividend every year. And I think you're going to get on top of that 3% dividend, 3 to 4% stock price appreciation simply because these other prescriptions grow. Like their biggest ones growing 30, 40% a year, like crazy. And they're potential tailwind from weight loss prescriptions, I think they're pretty good. So that's actually one of the best stocks I think are a good buy now. You could get in basically at the exact same cost basis as me. Look at there's my blue line. That's where I bought them. I only got 3 shares. Might buy more if I can get this one to fall like back to this $200 level. I mean, that would be golden for a great risk to reward, great dividend, 22 forward PE. Kind of cool if you're looking for a bit of a more of a defensive healthcare name with a good yield. Meta firing 20% of staff. Hey, I saw that news. Yeah, let me get to Microsoft, then maybe we can get to Reddit. Or I mean Meta before I have to go. I do have to go in like 10 minutes, unfortunately. But yo, if you guys wanted the follow button, we stream every Sunday this exact same time, no matter what, every Sunday the same time. And I might try and do a stream at 8 p.m. tonight when the market opens. But yeah, I greatly appreciate that. Again, I sell nothing. Ooh, Microsoft launches $99 365 with Copilot and Anthropic's Claude integration. Wow. Huh. Microsoft to launch Copilot health tools. Okay. Microsoft is a big holder of OpenAI, which is ChatGPT. Literally, Microsoft owns 29% of all of ChatGPT. So that's their AI exposure. They have Copilot as well, which is big. And all it's like just built in with all the Microsoft software platforms. So they're cheap. Like I actually can't believe how cheap Microsoft is. There's not much better stocks out there to buy than Microsoft. Like if you like a bunch of other stocks at their current valuation, you'll love quality of Microsoft at their current valuation. Better, safer credit rating than the US government to repay their debt. They only trade at 22 times next year's net income. I think that is like super cheap for quality Microsoft. And they're categorized, one of the reasons they're falling is because they're a big software play. And because look at this, software is 42% of the entire business. Their software does over 120 billion of annual revenue for them. So software is huge for them. You know, think of Excel, PowerPoint, all that. That does 120 billion of annual revenue for them. That's what I love. Another huge business for Microsoft is their cloud. No one really talks about their Azure cloud too much. This also does over 110 billion of annual revenue from Microsoft, and the cloud business is only expected to grow more year over year. So anyway, here's their net income right here. They had a slight adjustment this quarter. They didn't actually make 38 billion this quarter, but they did make like 31 billion. So it's just like, I have nothing bad to say about Microsoft. I mean, maybe like I don't like one of the fears is like, are they overspending on AI? Are they too much exposed? Like, will they get a good return on this money? Like, I think so. Like, that's not going to scare me out of Microsoft in this software dip. Like, I really am a believer in Microsoft. They're going to be spending like 40 bill a quarter for the next couple of quarters, but I think it's I don't know who's selling out. I definitely want to sell out on Microsoft. You get a good yield too. They do share buybacks. They invest in the future. It's just like every company in one way or another uses Microsoft. Microsoft plans to ship next generation Xbox consoles. You know, they own Minecraft. They bought Minecraft for $1 billion, and now that does well over $1 billion of annual revenue for them. They have so many cool businesses. Ooh, so yeah, let's do Meta real quick. This is another Mag 7 stock that's just like so cheap. Like, if anyone does technical analysis, I don't know, does this look like a kind of triple bottom here, trend line forming? Potentially the risk reward could look really good on Meta from a technicals, but I think the risk reward looks amazing from the financial fundamentals. Like forward multiple, Meta only trades at 20 times next year's net income. And yeah, Mr. Powell said they're cutting 20% of staff. You're right. Let's see that actually. I guess it's actually not. Oh, yeah, there it is. Meta Platforms considers layoffs affecting up to 20% of workforce amid infrastructure push. So, yeah, one thing being questioned on Meta right now is how much they're spending. They legit spend. They just guided this. They're going to spend $40 billion a quarter for the next 4 quarters in a row on cash from investing activities. They're going to be spending double what they're making. Like they can't afford that from net income or cash flow. So actually, for the first time ever, Meta has a net debt position with their Prometheus bond issuance. They just issued like 30 bill. She was like 40 bill, I think. So they actually do have a net debt position for the first time ever. But I'm not getting scared. Just like Microsoft, I would not be scared out of Meta, just because of overspending on fears. But this kind of does confirm the fears. Like, look at this. Meta delays their avocado AI model launch, underperforms its internal test, and literally is considering licensing Google's Gemini. So they're spending all this money and potentially like not going to win or the AI model race. I don't think Meta's Llama, Meta Avocado. I don't know if that'll ever catch up with, like, I love Google Gemini. And so I just think they should, like, I love their advertising business, and I like what they're doing with their Meta Ray-Bans. They have a Meta Ray-Ban glasses, if anyone's heard of those. They also are working on a smartwatch, which if they can nail that, that would be really cool. But yeah, great business. I do own Meta. You get a dividend. They do buybacks. They invest in the future. So yeah, here's my Meta position. But yeah, they're definitely being questioned right now for the AI spend, but it's not scaring me out of Meta. 20 forward PE just seems like like, could you see Meta at an 18 forward PE? Like, I can't, like, without some like black swan. Microsoft and Meta add nearly 50 billion in data center lease commitments. Meta to pass digital service tax cost to advertisers in 6 countries. Wow. What's all that about? So rates vary by country, 2% UK, 3% France. You know, I love when companies do that. They're like, all right, people of UK, your government did this, but you're paying 3% more. We're going to call it a UK tax fee. Don't get mad at us. Meta acquires AI agent social platform Moltbook. You know, what's another great tailwind for Meta is they just announced they're introducing ads to Threads and WhatsApp. So if anyone's heard of WhatsApp before and Threads, I actually find myself using Threads sometimes. They're putting ads on those apps now. That should be a great tailwind for their earnings in the future. 20 forward PE potentially is even lower. Um, PAGS announces board of directors approved a dividend. Metas, oh, what's up? Maxi says, I got cash secured puts at 585. Should be technical support. Yeah, that's a good one. That's a good price to do it at. Let's see, what was PAGS really quickly then? I got to go in 5 minutes. I'll end it with a portfolio update. But yeah, I might try and stream exactly in 6 hours from now at 8 p.m. because the market opens at 8 p.m. So we'll see how stocks move. So this is Pag Sergio Digital. Stock is not done too good, but yeah, they're paying a dividend. So they do pay a dividend. What do they do? Oh, probably because the valuation is so cheap. Look at that. They only trade at 6 times forward PE. When your valuation is this low, you can pay out like 5% of your net income, like literally only 5%. And it's like a 2% dividend yield for the stock. It's crazy. It's another kind of, you know what I've always noticed let's like Up FinTech or Tiger FinTech or whatever, anytime their revenue doesn't come from America, like the revenue comes from Brazil or Singapore or something, it's always a low multiple company. Like other country stocks, I just get low multiples. So yeah, that might be why they're at a 6 multiple, 6 times net income, because 98% of the revenue comes from Brazil. But what do? Financial service agents, software, digital payment company, and maybe we can go to their website. Reach the full potential of Latin America with our one-stop shop payment solution. So maybe it's like a currency conversion. Maybe like as like a traveler can like pay stuff, can boost your business. Or anyway, maybe it's if you're like a business in Mexico, you can accept all forms of payment. Or I really haven't done. I don't know what they do, but cheap 6 forward PE. Let's see the net income. Wow. They really do make like 100 million in net income a quarter. So they're making 100 million net income a quarter. And look, the dividend only cost 36 million this quarter. Or wait. Oh yeah, so their dividend kind of changes. They just did a 26-cent dividend. It was just a 12 cents and 14. Oh, these are all in 2025. Yeah, so these are all in 2025 this year. So yeah, they really did, or last year, they really did just started paying a dividend. Interesting there. Yeah, cheap company. Ooh, maybe we can slide in one more here. Actually, I can't. Or yeah, let me just end this with a portfolio update. Yeah, hey, thanks again, Mark. I appreciate y'all. Hope you guys have a great rest of your Sunday. Let me get this off with a quick portfolio update. I love being fully transparent. Again, if you want to hit the follow button, I appreciate that. We stream every day and every Sunday this exact same time. So yeah, year to date in our main dividend only portfolio, we are down 4.8% year to date. So we've done a little worse in the market. Or the past year, we're up 17%. But here's my total percent change on every stock. Luckily, we are still green on every holding in here, which is pretty good. And every stock in here does pay a dividend too. I also have a Roth IRA. A Roth IRA is just a tax-free retirement account, which is down 9% year to date. We started this exactly a year ago, pretty much. We're down 8% all time. Yeah, mainly led by like Webull, Cormetics. These are down pretty bad. But I'm not selling out of them because they're just too cheap to sell, and I'm actually might be looking to buy a little bit more of these. My most recent purchase is actually Moog. It's an aerospace and defense name. I'm like so bullish on this company. Yeah, then I have my Moomoo portfolio. This is known as my buy. If you look at the top left, it's called my buy and never sell account, where once I buy a stock in here, I just never sell it. This has been our real winner. Year to date, we're up 30%. Like the 2 year, this is return money weighted. Like from basically 2 years ago, started all this. And this was the April. Actually, I should pull up the 1 year chart. The reason, basically, we bought the dip during April. We were doing worse than the market. Like exactly a year ago, we were doing worse than the S&P 500. But then we bought this dip during the tariff dip, and now we're up just in the past year 140% or 21K. Basically, all the gains of this portfolio came from a year ago, mainly from like Comfort Systems, which we bought exactly a year ago down there on the dip during the tariff dip. That one's up, 4x almost. Then we have Powell Industries. We're up 6x on them. They actually just did a stock split, 3-for-1 stock split. And again, the reason we've done so good in here is because we haven't sold before today. Because most people, like on Powell Industries, if you're any stock, if you're up 100 or 200 or 300, 400%, you're probably going to at least trim a little bit, sell a little bit. But my rule is we're not going to trim or sell anything. We're going to see how it goes. We'll have a great dividend yield on costs in the future. One surprising stock has been Coca-Cola Consolidated, the Coca-Cola bottler. Actually one of the best performing stocks in all of history. I don't know how, but they just continue to climb higher just because they're a quality company with pricing power that does buybacks and dividends. And these defensive names are kind of being rewarded right now when kind of tech is struggling. Amazon's great. Yeah, phenomenal, never sell. #1 Fortune 500 company in the world in terms of total revenue. I just bought like $1,400 more of the stock at 204 and then one more share at 198. I'm just like, Amazon at 26 PE can't get much cheaper than that. Amphenol's been great too. Their top customers are Nvidia, Google. They make the optics and the copper cables and like fiber optics for data centers. Some big customers are Google with their TPUs, and Nvidia's NVLink Spine all uses Amphenol in their copper products. I love buying the Nvidia beneficiaries, like the whole Nvidia ecosystem. Like instead of buying Nvidia, because the law of large numbers is kind of tough. Like the whole company Nvidia is worth 4.4 trillion. You buy a share today, they basically have to be worth $9 trillion for you to double your money. I think some of the easier doubles might be on the AI beneficiaries like Comfort Systems that cools down your data centers, and Powell Industries that does the electrical work, the complex switchgear solutions, all that. From Amphenol, given the copper cables, and Corning, similar one to Amphenol, doing the fiber optics. And then Murphy USA, this is just my oil and gas play. Basically, thesis is here. Every time oil and gas prices are higher, people historically, or I guess the data shows that people don't fill up their gas station all the way to the full, or they don't fill their gas tank as much, and leading them to come back to the gas station more, leading gas stations to sell more merchandise and stuff like that. What's cool about this one is the low dividend, 0.5% yield. Normally oil and gas stocks have really high dividend payout ratios, kind of suffocating the growth, but this has been one of the growthiest oil and gas stocks because they do massive share buybacks. They buy back on average 7% of the stock a year. I get into it more, but I have to go right now. And then here's my Webull portfolio. This is like just my risk on portfolio. Here's my all-time performance. We haven't done too well at all. We're only up 5.3% all time. But yeah, we have some popular names in here like AMD, Robinhood, SoFi, Reddit. I made my never sell portfolio because some of my biggest regrets are selling out of great companies like Robinhood. I only have 5 shares left. I used to own 50, like 60 shares more, but I sold it all at 36 a share, and I would have been up way more. Like SoFi too. I regret every share I've ever sold to SoFi and a lot of these other companies. But anyway, that's the stream. Hope you guys have a great rest of your day. Make sure to hit the follow button if you want, and hit the like button if you haven't already. It'd still greatly help me out if you haven't already. But see y'all potentially at 8